All right, cap rate. Cap rate is another simple measure often used in the commercial real estate world. You won't hear this tossed around too much in the residential space. Again, when we're talking about commercial, we're talking about typically 5 units or above of residential living. So cap rate is basically your net operating income divided by the purchase price. And the measure that you're trying to get with the cap rate is the measure of performance, whether you're looking at a new building and you're trying to figure out how it's going to perform, or you're trying to sell your existing building to a new client and you're basically saying, I have a 7 cap, I have a 10 cap. And basically what you'll find with 10 caps are the lower the cap rate, you usually find a lower cap rate in a higher class neighborhood and with newer development, right? If a building that's built in the last 10 or 15 years is going to have a lower cap rate because the performance of that building is expected to be higher because there's less maintenance and everything else. Whereas you have a building who's 20, 30, 40 years old, you might have a higher cap rate because there is going to be more expenses. There are going to be other problems with the building. You might have a higher cap rate for a building with a neighborhood that might be more problems within that neighborhood as well, right? If I'm going to go into a more troubled neighborhood, I'm going to expect a higher performance or on that property as well. I might need something above double digits in terms of my cap rate. So you're going to hear cap turned around. It's a 10 cap, it's a 4 cap, it's a 2 cap. You're going to hear that term thrown around a lot in your investment career, and all you really need to know is it's actually the measure of the performance of that property. Some investors are going to want a 4 cap because they want to be in more desirable trophy asset neighborhoods, and some investors are going to want something that's above a double-digit, cap because they are looking in more blue-collar neighborhoods for their investments.
Point, and the only thing I'd add to that is because the cap rate is independent of financing. If you really read between the lines of what we're saying, it really is a measure of risk almost. An investor that's going to take a 4 cap property is going to be in a really desirable neighborhood for a really good property that's in great condition. Whereas if you've got a greater risk tolerance but you want greater returns, then you're going to go into either quote unquote worse neighborhoods, or you're going to go into older buildings that need more work, but you'll get a higher return, right? That's why instead of a 4 cap, you'll get an 8 cap, which will give you more income for that same purchase price.